Hello, Mohammed Shoaib. Welcome to this episode. How are you doing today?
Hi Ilma, I'm really well. What about you?
I am really great too. So, let's start this journey from the beginning. Can you tell me what led you to finance and your story from the beginning?
My journey in finance started when I started pursuing MBA from IIM in Udaipur. Before that, I was a science graduate, so didn't have much knowledge about stocks and investments. I do used to read a lot of economic newspapers and had a good interest in economics, but there wasn't any formal structure in my education. But MBA started that flow. And then I also started preparing for my CFA level 1 right in my very first year. And eventually I got more and more into finance. After my MBA, I started investing for myself. After a few months, I also started managing some family for portfolios. And I realized like I'm quite good at it because of the knowledge I have. So I started sharing my learnings on YouTube and on Telegram to my friends, family, and also some of the subscribers. Eventually, people also got a lot of benefit of it. They understand that I can give them some better return at a decent level of risk. And therefore, they also wanted me to start managing their portfolio. And I felt like this way I can help a lot more people if I become a SEBI registered personal guiding people on investment. So we started a formal advisory, or I would say formal consultancy, FiSC Capital 2 years ago. And now our team is just growing. Our investor base is growing, and we are reaching new heights almost every day. So that's my journey in finance.
That's great. As you said, that your journey was not something like that happens when you are just a kid and you started that I am going to be in finance. It was something that you figure out step by step, and that's really great. So just tell me, what was the problem that you saw in the market that made you think that people really need a cure to this problem?
Yeah, one of the biggest thing is that people don't really understand how to invest and why to invest, where to invest, any of those things. And this is an industry where there are a lot of negative motivation. One of them is trading. So in trading, people show you the best deals and make you feel like you can make crores of rupees in a day or in a single trade, which generally doesn't happen. And even if it does, it's not gonna happen every time you wanna sit on a trading desk. So in reality, this is not something an individual should do. They should start investing more passively, buying and holding the companies, or buying and holding the mutual funds and all. So this was a big problem. Second thing, I realized that there is a definite gap when it comes to an income level. Like for HNI, UHNI, there are almost every company in India, be it an investment bank or a boutique firm or a wealth management firm, they try to give dedicated relationship management. They try to bring the best of the best services to them. But the people who can be the future HNI, the middle class people, upper middle class people, or the poor class people, they generally don't have many options. Most of the people who are serving them don't even come in this industry as a interest. It's more like they don't have anything to do, so they become a sub-broker or a mutual fund distributor. And in such cases, they themselves lack the kind of skills or knowledge you need in picking investments. So that was one of the things which made me think about joining this industry formally as a professional and start working in this particular demography where there is a very much demand, but there is very little supply.
Okay, so that's great. As you're saying that you are trying to equalize the gap between the investors, the HNI investor, and the normal people by giving them the best of the best. And for those who are hearing this for the very first time, what exactly is FiSC Capital?
Yeah, so that's a really good question, Ilma. Many people don't understand what FiSC Capital really is because we have multiple offerings. It's in stocks, it's in unlisted shares, it's in mutual funds. We also sometimes help in loan planning, financial planning, and real estate. And then there is also insurance. The basic point we try to solve is financial planning and investment advisory. So we want to be a one end-to-end or a 360 investment solution for you. And when we come to investment, insurance is also part of investment. By investing in any security, what we try to do is we try to grow our wealth so that at a particular time in the future, we can have enough money to fulfill our goals and dreams. Now, what happens if I don't have the 20 years with me? Let's say 20 years down the line, I want to create 1 crore of portfolio by investing, let's say 25K per month. But what if I am not there for 20 years or 25 years? The end result would be that I have to be there to fulfill this dream. And insurance helps you even when you are not there. So if you feel like all your goals require 2 crore or 5 crore of money today, you can just take a term plan of that much amount, and that protects you in case of any, you and your family, in case of any mishappening. Similarly, what if I saved 1 CR, let's say, for my house, and suddenly there is any medical emergency that came in my house and the bill was 25 lakhs. Almost 25% of my investment in house has gone in one go. So for such kind of unforeseen circumstances, we have medical insurance. And these are the things which is actually as important in financial planning as your current financial status, be it your salary, saving, expenditure, or any kind of purpose you already have. So FiSC Capital is basically your partner in financial planning and investment management.
That's really great. As you said that you are securing your investor 360 degrees. So just tell me, what kind of people do you usually help?
As I said, there is not a strict definition that we will serve these people and we won't serve that people, because our services are very customizable. And that's one of the USP which differentiate us from the others. Most of the platforms you see, even the big mutual funds, they are a one-size-fits-all kind of products. It's not customized based on your needs. What we do is we try to help in making a customized portfolio of investment, customized insurance plans, and all those things which are direct fit to your requirements. Now, when we say your, it can be Ilma, it can be Ilma's mother, it can be Ilma's father, it can be anybody else who can be a person running his house on salary. The salary can be 1 lakh per month, the salary can be 10 lakh per month, or the salary can be 25,000 per month. The saving can be 1,000, can be 500, or can be 5 crore. So for every kind of money and every kind of person, based on the time horizon they want to invest their money, we have solutions across all the options, be it mutual funds, stocks, commodities, bonds, real estate, everything. So that's how we try to serve. There is no specific criteria. The only thing currently based on the Indian law, the people we can serve are people should be 18 plus, and for minors we should have guardian, and then there are NRIs we can serve. So we serve all these people.
That's great. That customizability is one of your USP. So can you tell me a bit more things about what makes FiSC Capital different from any other platforms out there?
I think some part is already covered in our last question. What we try to do is we try to understand your financial status and your risk profile. So we have risk questionnaires, we have personal budgeting tool, we have goal planners. Just try to give us a good understanding of where you are spending, what is the amount of saving you actually have. If there is any chance we can increase your savings or improve your financial health. For example, if you are, let's say, having 1 lakh of salary and 2 lakh of EMIs, that's not a good financial health. Whereas a person who has 50,000 of salary and just 10,000 of EMIs. So that these are some of the examples which we see, assess, and try to help you first improving your financial health. Once you become stronger in financial, then only we suggest investment. Now also I see a lot of times people are recommending that stocks are the best solution and you should always invest in small caps or mid caps or large caps based on a particular thing. Real estate is the worst investment and all those things. But you also have to understand that everybody has a different requirement. If I want to invest for 2 years, stocks is definitely not the right place to be in. Because for last 4-5 years, market has gone up doesn't mean that it goes up every year. So there is also a chance that you put the money and then there is some recession or some big mishappening happens in the country. So what I'm trying to say is that there is a person involved whom we focus first on. And then of course around it, even if you do it individually, you may read this a lot. But the kind of discipline which can run your investments, because I will be avoiding all the behavioral biases you may have. What kind of behavioral biases? Let's say, just take one example that a particular kind of stock or mutual fund grew a lot in last 1 year. Let's say it grew by 100% or 200%. That doesn't mean it is going to go up only in the future. Also, based on your risk tolerance, you may not be fit for buying that particular stock or mutual fund because let's say you just need money in next 6 months. So if it goes down 20%, so average return will be 80% plus because 100 it have come down. But in your portfolio, it's minus 20. But market won't show it. So a lot of people make this kind of mistake of buying something which is already quite high. Okay. And something is going down, let's say 20-25%, doesn't mean that it is only going to up from here. There may be some fundamental systemic issue. So many people say that when things are low, and many people use this strategy that once a stock goes 20% down, 30% down, they just buy it. And what if it becomes a yes bank or a Suzlon? So these are the things which one has to understand. And that's where we only take risk based on the appetite. We don't take risk on all the money. There are very customizable allocations which we have, which are fit for all your financial goals and on all your budgeting. And you won't even see this through, but we see this through when we see all your profile and all. So that is the kind of difference we bring in the market, which other big players can't because they don't have that kind of their client base is huge. It's not their that they don't want to serve, but they are huge and they are serving a lot of people, and therefore they have a lot of limitations in the level of granularity they can go into your financials. That is it.
As you said that they are huge firms. So when FiSC Capital become that huge firm, so do you think you will be able to serve that amount of investor as customizable and prioritize their investment as you are doing now?
That's a really good question, Ilma. The only thing which is gonna help us in differentiating as compared to this big firm is the customizability. So it's not like one of the feature we have, it's the core feature of the firm. So what we are trying to do is we don't want to outgrow ourselves by just bringing more and more clients. We try to have a lot of checks and balances. And as and when we feel like the growth is huge, we need more people to manage. We are going to have dedicated relationship managers which are as qualified as I am or even better qualified than I am. So there will be CFAs and MBAs who would be in our investment advisory team. There will be CFAs, MBAs and all the research experience in our research team. And then there are operations people in the operations. So it's not going to be a kind of firm where we are using just a standard product for all the clients. The structure is going to be same. If I can't serve, let's say I can serve 500 people or 10 or 1,000 people, Beyond that, there is going to be a new manager who is going to do. But the core philosophy, the core investment recommendation is going to come from the research team. So that has to be customized for the investor's particular profile. That will be done by the investment advisors, and the research part is being taken care of by the core investment team. So it's not like the person is giving a random recommendation. There will be a set of investment options. Only from them they can choose, because this is approved by the research. So that's how we are trying to grow, so that there will be standardized recommendations but a customized portfolio.
That definitely is incredible and really great thing for both users and for your firm, as it's a great USP. Now, just tell me, if I'm someone who is just starting out, why should I even consider a firm like yours to invest? Why don't I just figure it out by myself?
There is nothing wrong in figuring it out yourself or started to invest by oneself. The only downside to this is that whatever time you are going to spend in investing, that will be coming out either from your family time, your personal time, or your work time. As you say, you are creating a career in data science. If you would be moving into finance and investment, you obviously are going to take some time either from data science or for personal leisure or family. Now, suppose if everybody wants to become a data scientist themselves, there won't be any need of you. Everyone will just use their own data and make the analysis and start working on them. So it's just like that. That you can always start studying medicine and try to buy it from the dispensary. Don't go to doctors. Try to fight your own cases. Don't go to lawyers. That's one thing. Second thing is that the kind of research you can do, there is always a limitation, because you yourself, even if you put all your 24 hours, let's say I have a team of 10 people and we all are giving 8 hours a day. So it will be 80 hours of research. Second thing, we all are already experienced, let's say 5 years, 10 years in the stock market. So that kind of experience, to take that kind of experience yourself, it will also take a lot of time. And therefore, there is always an advantage to hire professionals if you can afford them. Eventually, you will realize that, let's say I am earning 2,000 per hour. So if somebody is charging me 4,000 per year or 6,000 per year kind of fee, he is just charging me my 3 hours of work. But if I start investing myself, I am actually putting, let's say, 2 hours per week. That's 1,000 weekly, 4,000 per month kind of thing. So there is always this kind of cost benefit analysis you would do. And if you do that, and if you have that kind of level of understanding, you will see that it's not a good deal. And in finance, it's all about making good deals. So you will eventually feel that hiring a professional managing my investment is always going to be cheaper and better than me doing it myself.
Okay, so nowadays we see so many influencer giving advices like investing in this stock and that kind of advices. So, in your thought, how dangerous or helpful it could be for people who don't really understand finance?
Yeah, I think it's not that everyone is going to give wrong advice, but it's also true that not everyone is giving the right advice. Correct. So, let's say if I am a professional seeing those videos, I can easily differentiate who is rational and who is giving you right advice by doing all the analysis, or somebody who is just doing this for increasing the customer base, creating panic in the market, whatever. Or if the person himself is not good enough and educated enough to make those kind of recommendations. So the thing is, identifying the right people from the wrong is always going to be difficult if you yourself know a little. That's why we have judges in the court, because they know legal system a lot more than a young lawyer or anybody who has committed a crime, right? So that is always going to happen if you see many videos that some of them may be right and some of them may be wrong. One thing you can do is improve your own knowledge so that you can easily differentiate what is right, what is wrong. Second thing, always try to validate what you are reading. So you can talk to experts are like us, or you can do your own research and then only see that whether it is true or not and then make a decision. So that's why investments are market to subject risk. Please do your own research before investment. So this is what SEBI and everybody tells, because it's a market risk. It's even if somebody is saying if I am doing a lot of research and I recommend something, that is not 100% accurate that it is gonna go this way. So one example could be that we feel market is only gonna go up from here. We are in March 2019 or we are in February 2019 and suddenly there is a lockdown of 3 months. So for no fault of ours, market goes down, stocks goes down. That doesn't mean we did a bad job in analysis, but this is a kind of thing which is once in a lifetime. You don't know the kind of impact it is going to create in the economy. So that's why some things you can completely not avoid, but there is still some knowledge and learning and analysis which can always help you in becoming better at your investment and identifying the right set of influencers or advisors you should follow.
So, as you said, is that okay to follow trends, or should we be more careful? Like, there was a trend in the beginning of this year about the Trump coin and all the stuff. And that's not the only trend. There are trends come time to time. So, what do you think about that?
So there are many investing philosophy. One of them is called momentum investing, where they actually follow trends and patterns. I am being a fundamental analyst. I don't generally go for trends. I generally want to pick investments before the market finds them out so that I can get the best return out of it. So that way I always try to go against the trend. It's not that I don't invest in company which already grew, but I only do it if I feel like they can grow a lot more than what they have already done. So these are some things which I do. I personally would suggest that crypto and all these kind of things are something which is not rigidly evaluatable. So what I mean is, when I invest in stock or somebody invest in real estate, there are multiple ways you can identify whether the investment is at fair value or it is cheaper or it is a kind of costlier, right? But in crypto, you don't know. If a Bitcoin is worth 1 lakh or 2 lakh, you can't differentiate that what is right, what is wrong. As I said, when I do an analysis of stocks, I can do relative valuation. I can see what all other stocks are in the same industry, what kind of valuation ratios they have, or what kind of financial strength they have, and if this company is better or worse than them, and based on that, whether it should be priced at this particular range or not. Similarly, in discounted cash flow model, I try to assess what kind of earnings the company can have in the future. I discount them to the present value, and all the sum of the future cash flows discounted at today's rate makes a value. These are the applications which are like universally approved. A lot of investors use them, and therefore this not only works, this also gives you a fair estimate of valuation of companies. But the same can't be said about the charts and patterns, because you don't know what a lot of other people are thinking. They may start selling even after a very strong trend of up move. They may start buying even if there is a kind of guaranteed pattern of downward slope. So that's why I suggest all this chart investing and technical analysis you should avoid, at least in the beginning. After a lot of time studying all the fundamentals, if you feel that these technicals can help me to some extent, although I personally don't trust them a lot, but a lot of people do. So if you also do that, you can start learning on that. But I don't see any kind of benefit in doing technicals. I feel like fundamentals always going to give you a lot more real value in investments.
Okay. Now, just tell me, if I'm someone who wants to start investing but doesn't really want to do deep research, so is there any way to do it smartly?
Yeah, there are many ways you can start. You can start firstly with mutual funds so that you don't have to do the research on individual stocks. Then in mutual funds also you can take some low risk assets like hybrid funds or dividend yield funds, some of the large cap funds. I personally don't say that small caps and mid caps are more risky than large cap fundamentally, but they do are a bit more risky when we see the price fluctuation trends. That's the only reason people suggest blue chip and large caps. Otherwise, in terms of returns, small and mid may give more return going forward. So you can always diversify your investments. If you have low money, you can start with something more like a bonds and debt funds. And whatever be the profit, only those portion can be invested in stocks, equity funds, and the remaining investment can be placed in the bonds or debt funds only, so that your money is always protected. You won't see that your money is going down when market is down. You are only investing the interest or the profit part of the debt fund. So these are some things you can do. For more details, we can always have a chat one-on-one. I can understand your requirements. I can understand your money availability, and that's how I can create a plan for you. And that's for all the viewers of the video. They can also reach out to us, and we can do the financial planning activity for them.
So there definitely are going to be lots of people who will relate to my journey. So how does FiSC Capital is going to help them with their first step?
As I said, you just have to reach out to us. We can understand your requirements on a high level in a call. And if you feel like our services are worthy, we can start onboarding you. For mutual funds, there is no additional fee. We just earn based on commissions. So we won't charge anything extra from you. We just registered you, and based on your money availability, we make investments. In stocks, we have some very standard plan, which is more or less around 1% of investment portfolio. Consulting starts as low as 500 per month. So even there, if you are genuinely interested in a stock investment, we can discuss more. And for the financial planning and other activities, they are all complementary. So it's not like we are going to charge you more. We will first try to understand what kind of risk profile you have, what kind of budget you have, what kind of financial goals you have. And by mixing all these, we can identify where to invest and how to invest. And first we share the plan with you. Once you are okay with that, then only we will make the investment decisions.
This was incredibly helpful. I know that if I'm learning, there are definitely going to be people out there listening us are definitely learning too. If you've been saving money, working out, or just trying to figure out what's your next step going to be, don't overthink. Start with FiSC Capital. They are offering you free consultation for their new investor. You will find the link in the description box down below, or you can just message them start on the Instagram. And Mohammed Shoaib, thank you for your incredible insights. You made investing so much accessible to everyone around us.
Thank you, Ilma.
Thank you all for tuning in. This is just the beginning.